Welcome to Cherry Street Investor Education with Kavita Baratake, passive income coach and founder of Cherry Street Investments. Education that is designed for you to take control of your financial life. Join us to learn how you can create multiple passive income streams, diversify your portfolio, save on your taxes, and much more. Become a better investor and fast-track your financial goals. Here's your host, Kavita Baratake.
Thank you again, everyone, for joining. This is Money Wise Learning, and I'm Kavita Baratake. I'm going to talk about finances and provide financial education for all you folks, adults, young adults, kids, whoever wants to join in, very welcome. Today, our session is going to be focused on assets, liabilities, and much more. Besides this, I want to kind of start with an introduction to, okay, what to expect the next 10 weeks or 10 sessions, since it will not be 10 weeks, and also talk a little bit about what I expect from you, what I'm bringing to the table, so we are on the same page. I'm also going to talk about what assets and liabilities are and some of the money beliefs, which are very important to work through. So my team, Ritesh has been like my lifesaver. He's my exec assistant. And this is Kavita Baratake. That's me. I'm the founder of a company called Cherry Street Investments. Ritesh is my right-hand man. He does everything for me. So this would not be possible without him because I'm right now in the middle of doing 5 home renovations for 5 different houses. So I'm crazy busy. A little bit about me. I'm from Bangalore, India. I moved here, now called Bengaluru. I moved here to the US in 1998. I graduated with a master's in computer science from Texas A&M University, College Station. For those of you who are going to A&M, hey, Gig'em, and Aggie, my daughter is going to actually UT. So she's going to be a Longhorn, and I'm an Aggie, so we live in the same house. So wish us luck. I graduated in 2000, and I spent about 20 years as a technologist in different companies, Wipro, IBM, and Atlassian. I decided that I wanted to do my own business, and I have been a real estate investor. I started investing in 2009. So, and then I was financially independent in 2019. What does financial independence mean? That means I didn't need a job to pay my bills anymore. So I could actually move out of my job and have my bills paid by my investments. So I could focus on real estate or whatever else I wanted to do full time. I'm a mom to an 18-year-old daughter, Anya. She's going to UT Austin to study design, and very proud of her. And 2 puppies, Milo and Oreo. So that's Anya, and these are puppies. Milo is the brown one, and the black one is Oreo. So what will I bring to the table in these 10 sessions? I want to share my experiences as a person with a career. I've had a career in technology and a college education, and all of you are looking to do both of those things. Most of you, right? I assume. And also as a real estate and stock investor. So when I started investing, I was mostly into stocks and stock options. And then I moved into real estate investing. Now I not only do real estate, but I also do some other non-real estate investments. So I have a lot of breadth of experiences as an investor and as a money manager. So I work with people to invest their money into different assets, and we'll talk about what assets are today. Then I'm taking this time away from my business to develop this curriculum and present it to you so I can help you learn more about money. Because I strongly believe that an education in money will help you immensely throughout your life, especially so when you want to have to manage money. If you're 10 years old right now, you probably think, I don't really care, my parents got it. But eventually in another 8 years, you'll be there where you need to figure out how to manage your money. So you'll have a job, you'll have gas, you'll have a car, you'll have gas expenses, you'll have parties to go to, you'll have movies. You might be going to college, so you have college expenses and more. So you need to figure out how to do this all. When you have a job, like what is a W-2? What is a pay statement that I get? You need to be able to understand those things. So Welcome to being an adult, even though you're not an adult yet. If you're an adult, welcome to being an adult. And we're going to talk about how to be an adult from a financial standpoint. What I expect you to bring, your undivided attention. I want you to spend your time with your parents or parent to finish your homework assignment after every meeting. Don't delay it too long and just do it an hour before the next session, because then the point is really lost. You really want to learn, right? If you want to learn, you need to put some time into it and come back with the lessons you learned. I don't expect you to give me numbers, but I expect you to understand and come back with what you learned about that particular assignment, doing that particular assignment with your parent. And that is the meat of what you're going to learn. This is just going to be an intro here. I'm going to tell you some things, but where you're going to really learn is actually doing these homework assignments. So don't shortchange yourself on it if you want to get something out of this session, right? Of this set of sessions. Ask a lot of questions. Please use the Q&A box you have in your chat, in your open session, or via email if you're watching this recording. So a lot of kids might not be able to attend this live. So if you're watching the recordings, please send me an email if you have any questions. It's not going to be very interactive because I can't see all your faces. I wish I could, but that would be a lot of commotion with 70-something kids trying to talk at the same time. So this is the format that it's in. If you really want to speak up, I'm happy to bring you on stage to speak. So I just have to make you one of the panelists. Please attend the full live session whenever you can. We understand life happens. You have other things, other conflicting priorities. You're going on vacation. That's okay. But whenever you are here, try to attend the full session, because one, you learn much more. You learn much more than watching a recording. Two, there's prizes at the end of each session. And I'll give away some Amazon gift cards so you can go buy this really cool goodie that you want to buy now. What will you learn? So these are the 10 weeks of topics we'll cover. Today it's assets, liabilities, what's a balance sheet, what's an income statement. Next week, we'll talk about the types of loans and interest rates. The following week, the third week, it'll be take this week as a session. It might not be a physical week because we might cover 2 sessions a week, right? So the third session will be types of insurance. You need to understand what's home insurance, what is auto insurance, what's umbrella insurance, what's life insurance. There are so many different types of insurance policies. Why do we need that? We're going to talk about debit cards and credit cards. We're going to talk about credit history and credit scores, as one of you asked. How to build a killer score. What are some of the factors that your score depends on? We talk about taxes, income tax, property tax, sales tax. Welcome to the world of adulting. You know, if you make money, you got to pay taxes, right? We'll talk about retirement accounts, 401k, IRA, Roth IRA. So why do you care about retirement accounts when you're 15? You don't care right away, but when you start making money, you kind of want to start saving money into a retirement account. And we'll understand why you need to think right now. And I'll show you the effect of what's called compounding money. When you start early, it exponentially grows. When you start late, it doesn't grow as fast. So that's very important to understand why young people still need to worry about retirement, which is really far away. We'll talk about paycheck. What does it all mean? Like when you get your first paycheck, what does it mean? Budgeting, helping, saving, spending. How much should you be doing each one, right? Like how much do you help other people with? How much do you save for yourself? How much do you spend with your money? Investing, what kind of investments are out there? Stocks, bonds, mutual funds, real estate. Of course, this won't be a deep dive into investing, but if you're really interested, follow along my other webinars where we'll deep dive into specific investments, right? We'll talk generally about what kind of investments are there. In the past, I've done this program where I allowed you to go in and trade stocks, like not real ones, but funny money, you know, like online money, and you could trade stocks. And we had like this price at the end of it. If you bought a stock, you had bought some stocks, you had a certain amount allocation of money, and now you could buy whatever you wanted based on the research you did. And then at the end of the game, like let's say 3 to 4 weeks, whoever had the most money, they invested wisely, would get a prize. So if you guys are interested, after session 10, post session 10, let's say end of July, we can decide if we want to do that. So let's head into today's lesson, assets, liabilities, and more. So as long as we've been known in the history of mankind, we have always used some kind of money. And earlier, there was no real money, but there was a barter system, right? Like if I had gold and you had something else, and maybe we bartered it, and I said, okay, I'll give you a piece of gold and you give me this. So that was the pre 9000 BC money, right? Or barter system. Then we went to goods and livestock. Then we went to barley, silver, gold, copper. So there were different ways of trading, which were exchange of goods basically over a period of time, right? But the coins and paper money started coming in around 400 BC, and goldsmith banking came around 1450 AD, and now we are talking about cryptocurrency, and there'll be a lot of growth in different kinds. Like right now, we use a lot of digital currency, like Venmo, Cash App, and others. So all this has been evolving over a period of time. So money is important to our lives, and money continues to be important. Of course, it's not the most important thing, but you do need to understand the history of money and why we need money. So money can buy a lot of things. It can buy a fancy new car. It can buy gas for your car. It can buy, food, groceries, can buy a nice new laptop. It can buy a lot of good experiences, right? This is something I really cherish. I love traveling, and I want to make a lot of experiences with money. You can do a lot of different things. You can go to college. You can, hang out with your friends. You can party. You can buy a Nintendo game box. I don't know, whatever else money can buy, right? But money can't buy is all these other things. You can't buy happiness with money. You can't buy love. You can't buy respect. You can't buy manners. So all of this is super, super important. So money isn't everything. But hey, money can buy happiness. It can buy cows, and cows make milk, and milk make ice cream, and ice cream makes me happy. So, hey, money can make me happy somehow. I also love traveling. Jokes aside, I love traveling, and money does afford me the ability to do that. I'm traveling from September to November this year, and I'm excited because I couldn't have done this trip if I didn't have the money to finance this trip and not work for 3 months. Right? So money can buy a lot of things, but money can also not buy a lot of things. So one of the things I feel is really important is something that I have personally had to learn about money, which is undoing some of the beliefs that I grew up with. And maybe some of you there, some of the kids there, some of the adults there will relate to this. You did grow up with certain things your parents said, or certain things you heard all the time, and it kind of stuck with you, right? So when I was 4th grade, so whatever that translates to, about 9, I really wanted this big, like a small, cute, shiny bike called BSA SLR, and that was 800 rupees, which was about $10 right now, and I couldn't get it. And so I made up my mind then, when I couldn't get the bike, that all my life I would never want something that I couldn't have. So that was my programming about money, right? But it could have very well been that my programming was, I couldn't have it. That means all my life, my belief could have been, I'll never have what I want. So I've seen both of them play out with people, right? So there are limiting beliefs, and let's talk about a few of these limiting beliefs, which if you have any of them already, it's time to let it go, right? If you heard money doesn't grow on trees, let it go. There's plenty of money to go around. If you've heard money is the root of all evil, I disagree. Money makes people more of who they are. If they're evil, then they become more evil. If they're good, they become more good. So money gives you an opportunity to actually do good in the world, because if you have more money, you can help more people. So I think you need to remove all this programming around money so you can bring in good programming around money. And that's the first step, because this programming comes in very, very early. Money is hard to make. That's not true. Money is easy to make, but you don't want to always expect that, oh, money is just going to fall everywhere I go. You got to work for it, right? You need to be frugal to have more. Yes, you want to save, you want to spend, you want to have fun, but you don't have to kill yourself and not spend anything you're making, right? To have more. It's not necessary. You need to learn how to live a good life and save and do the things you want, right? You're selfish if you want to make a lot of money. That is not true. You're just ambitious. You might want to make a lot of money, and it's okay. Money determines success or failure. This is something I've seen a lot in our society, where if someone has a lot of money, they're successful and they're well regarded. And I just feel like you want to really respect a person, look up to them, not because they just have money, but because you really respect their values and they are good people, right? So I never look at money equals success or lack of money equals failure. I think a good person who's making money but figured out how to make money and helping people around them is success. And the other limiting belief I've seen a lot of adults have is, realistically, I can only make this much. That's not true. That's in your head. You put a box around yourself and you said, I can only make this much. And that's true. Whatever you believe in, you make it happen. Which gets me to this very important quote that Gautama Buddha said. What you think, you create. What you feel, you attract. What you imagine, you become. And I think this is so true for money, so true for everything in our lives that you want. If you want to go to that awesome college, if you already thought that I can't get there, you're right. You can't get there, right? But if you have this belief that I am going to get there, I'm just going to happen, and you can imagine that it's going to happen, you will get there. So this is true for money as well. If you think you can't have, or you won't have money, or you don't have money, you won't have money. So just be very cautious right now as young people growing up, that you remove all these limiting beliefs around money. Okay. Instead, you want to build empowering beliefs around money. You want to believe that there's enough to go around. There's abundance. It's enough for everybody. There's enough money, so you can help other people when they don't have enough. So now we'll come to the actual lesson. As always, I like to digress, but this is really important. The belief is so much more important than everything else we learn. It's the fundamental thing around money, right? The beliefs. So what is an asset? Simply put, an asset is something which puts money in my pocket. So let's say I have cash. I put the cash in my pocket, it's money in my pocket, right? So that's an asset. A cash of any sort is an asset. A cash I own of any sort is an asset. Cash I put in the bank is an asset, right? I have an investment in stocks. I have an investment in equipment. I have an investment in a car. I have an investment in a house. They're all assets. Any kind of office equipment, machinery, inventory, real estate, accounts receivable. So it could be personal money, personal assets, or it could be a business asset. So I have a company. My company has assets. So accounts receivable means that someone owes me money. Those are receivable accounts. And that's an asset for me because someone owes me money, right? So that's money. It's supposed to come to me. What's a liability? A liability simply takes money out of my pocket. That's all it is. So in is asset, out is liability. So examples of liability, any kind of debt, mortgage debt, bank debt, car debt, any loan that you take from someone that you have to pay back is a liability. Money that you owe to others, basically. If you owe taxes to IRS, it's liability. Accounts payable. So right now I'm getting a home rehabilitated, like rehab done, renovated. And so I owe money to the guy installing countertops. That's a liability for me. I need to remove that from my assets, right? So let's talk about what a balance sheet is. It's really very, very simple. A balance sheet shows assets, that is, I own, things I own, liabilities, things I owe to someone, right? So it could be a personal asset or a business asset. a personal liability or a business liability. So this applies to both person as a single person or as a married couple or a business. So assets I own minus liabilities I owe equals what we call net worth or equity. Okay. So essentially what it says is, if I own $200,000 of assets and I have $100,000 of liabilities, my net worth, what I'm really worth, or what I call equity, is 100,000. It's assets minus liabilities. So let's look at this example here. I have cash of 20,000. I have stocks worth of 20,000. I have bonds of 10,000. I have a house, a real estate of 200,000, and I have a car worth 50,000. If I sell it today, I would get 50,000. Okay. So that's the total of all this is 300,000. So my total assets are 300,000. I sum up all these things, right? Now I have liabilities, what I owe to the bank or to someone else. I have a car loan, which is 30,000. I have a mortgage on this house. There's a loan on this house called a mortgage, and that's 150,000. I have other loans. I don't know, I borrowed some credit card money. I spent some money on my credit card. That's 20,000. So I add all these up. That's 200,000 liabilities. So what's my net worth? It's assets minus liabilities is your net worth. So 300K minus 200K is 100K. So that's your net worth. Okay. That's an important thing to understand here is net worth calculations. And you're going to be quizzed around this. So pay attention. Assets minus liabilities is net worth. We'll talk about what an income statement is. Very simply, an income statement shows income as well as expenses. So again, it can be for a period of time. It can be monthly. It can be yearly, right? You can have a yearly income statement. You can have a monthly income statement. It can be for a person. It can be for a business. So if I have a business income statement, I have different things in the income. Maybe people are giving me money for my services. It's different from here. But let's say this is a personal income statement. A personal income statement might include, I'm working in a job, I'm getting a salary, I'm getting stock dividends, which means the stock, the company that you own the stock with pays you a monthly amount as dividends or interest on the stock. On the the earnings on the stock, and then there's interest on savings. So I had the $20,000 in the bank, so the bank pays me interest on my $20,000. These are all income. Now you have your expenses, your house payment, car payment, utilities, groceries, eating out, taxes, credit card payment, school loan payment. So all of these equals cash flow. So income minus expenses is your net cash flow every month or every year, as might be. Yearly cash flow or monthly cash flow. Now let's take an example of an income statement. So you are making $3,000 a month, and your expenses now are rent, $100,000 a month, car payment, $300, utilities 100, gas 100, groceries 300, eating out 200. Now, what do? You add all your expenses together, right? And that's the sum here. And you take all your income. And this income minus all your expenses is your cash flow for the month. So in a realistic situation, if you're working and you're making this income, and hopefully you're making much more, but if you have all these expenses, that's the money you have to save, to invest, or to maybe donate a part of it to help some charity, right? So you want to divvy up the amounts, and we'll talk about that in our budgeting class later. So let's talk about cash flow patterns. This is a very interesting philosophy, and I want you to go look at this book called Rich Dad, Poor Dad. Rich Dad, Poor Dad, kind of required reading for you guys in this class. So if you can go buy this book, Rich Dad, Poor Dad, I will highly suggest it. It's by Robert Kiyosaki. And this is directly from Rich Dad, Poor Dad, talks about cash flow patterns. The reason this is important is to understand how to create wealth, which is to understand how to change your cash flow patterns. So a poor person, right, someone who's living paycheck to paycheck, is usually making a paycheck. They work a job, they make a paycheck, and all their money, 100% of the money is gone in expenses, right? They are spending, let's say they're making $3,000, they're spending $3,000 net zero. They don't have any savings. So income is completely spent on expenses. Usually, either they're making very little money or they're saving and spending too much for what they're making. It's really not how much you make usually, it's how much you keep. The poor person usually doesn't have any assets. That's the cash flow pattern of a poor person. So there's an income statement, but there's no balance sheet, right? So next one we'll see is a middle class person. We have an income statement. We also have a balance sheet. What's the difference here? In the balance sheet, unfortunately, more than assets, people have a lot of liabilities. So they have a home that they live in. They think it's an asset, but it's not. Going back to our question, if you lived in a house you bought, you're paying a mortgage for it. It's taking money out of your pocket, correct? So then it's a liability. It's not an asset. But if you take the same home and you rent it and you make money from the monthly rental, then it's putting money in your pocket. Then it becomes an asset. So the same home can become an asset if it's treated right. The same car, which car payment is again a liability, right? That can become an asset if I make money from the car rather than losing money from the car. So we'll talk about that a little bit also. So what are some of the patterns of a middle-class person? They make good income. They really make good income, but they also spend a lot. They buy an expensive house because they feel like, oh, I have to have this kind of house because my friends have this kind of a house. I have a lot of credit card debt, and then I have an expensive car because I need to drive a nice car, right? But the problem is liabilities increase your expenses. So what's happening here is they work a job, they make a salary, and they have a lot of liabilities in the balance sheet and no assets. They might have some assets. Okay, we'll now get to the next part where you start creating assets, because assets have to put money in your pocket, right? So a typical middle-class person will create more liabilities than assets. So they'll take money from their pocket. And now they'll be paying all these expenses. And so all their money is gone here. They're not really working to create asset, but they're working to create a lifestyle, a good lifestyle. But that doesn't help your future, right? Where do the rich do? How do the rich do it differently? Is here. They create assets here in the balance sheet. The reason that's so important is now they don't need a job. They don't need to necessarily work a job, right? You see there's no job line here. So when you saw here, there was a job and you make a salary and then you create a liability and expenses. And here, we don't really need a job anymore if you create enough assets that pay for all your liabilities. You still have liabilities. You still need to live, right? You might have a mortgage or a rent. You might have a car payment, or maybe not. Or maybe your income is paying for your car payment, right? Your rental income, your dividend, all your investments are bringing in a lot of income. And these assets, this arrow here shows that these are the assets, the real estate, stocks, bonds, notes, intellectual property are creating income for you every month. And now you take that income and use it for your liabilities and expenses, but you're not really working for that income anymore. You don't have to. But if you do work, now you can just buy more assets with it. So let's say I did have a business and I'm working. Now the business can create more assets. So your liabilities are very low, but your assets are growing. And this is the place you want to be if you really want to be rich. You need to create more assets, as many more assets as possible. So that could be real estate, that could be stocks, that could be bonds, and more. And the expenses are all covered by the income from assets, right? Your assets are generating all the money for paying your expenses. So I'm now going to open up, and you can type it in the chat box. Which of the following is an asset? Home I live in, a car, a rental home, or credit card debt? All right, three. Okay, good. All right, someone said car. We're going to talk about that. Someone wasn't listening. So, all right, we're going to talk about car. Okay, this is a very good segue here. How can you turn a car is most definitely a liability. A car that you own and you drive is most likely a liability because you're making a car payment, you're paying for insurance. You're really not going to make it an asset. Can someone tell me how I can make a liability like a car? Okay, I have a car payment and I have insurance I need to pay for the car. So let's say I have $400 a month I need to pay for the car. How do I make this into an asset? Let's see the smart people here. All right, make money off of it. How would I make money off of a car? Uber driving, good one. Anybody else? Rent the car out, do Uber. Yes. So, but when you do Uber or you rent the car out, your expenses have to be still lower than your income, right? Your income has to exceed your expenses. So your net cash flow is positive. Then you have just now turned your liability into an asset. Okay. So good job, guys. So say I have a car payment of $300 a month and an insurance payment of $100 a month. I use the car for delivering groceries or as an Uber driver, and I made $1,000 a month. I went door dashing, I put some effort into it, or I did Uber and I made $1,000 a month after spending $200 on gas. So then the calculation runs $1,000 total minus $300 for the car payment, $100 for the insurance payment, and $200 for gas. So I have $500 in my pocket now. So now this is an asset because it put money in my pocket. Okay, the assignment for this week is to talk to your parents about what you learned today and use their help to put together what kind of liabilities and assets your household has on their balance sheet. Please note, teach your parents that primary residence is a liability. The house itself is a certain value, but primary residence is a liability, okay? But if you have a rental home, it's an asset. If it's putting money in your pocket, it's an asset. What are their sources of income and expenses? So one, you're going to build out an income sheet and you're going to build out a balance sheet, right? So you're going to have assets and liabilities on one, and then you're going to have income and expenses on another. Make this chart similar to what we talked about here, right? This is your income statement. And then you have a balance sheet. I want you to create this just for yourself. You don't have to share it with me, but I will be asking questions next week at the beginning of the session. I'll be asking some questions and I want you to come back to me with answers, okay? So that's it for tonight. Have a great evening, all of you. I will see you next week, Wednesday, 4 p.m. Central. Thank you. Bye. Hi, I'm Kavita Bartake. I hope you found this video useful, and if you did, please don't forget to subscribe to my channel so you can get notified of any future videos I upload. I plan to cover a lot of investor education on this channel, and I hope you'll stay with me for it. If you have any feedback on future content you'd like to see me cover, please drop me a note or a comment on my video. Thank you for watching, and thank you for supporting me.